You are listening to Mining Stock Education.
But now I believe we are in the next big major secular bull market. Only the fourth in the history of gold as an investable asset.
Welcome to Mining Stock Education. My name is Brien Lundin. Today with me, I have Brien Lundin, the editor of the Gold Newsletter and the host of the New Orleans Investment Conference. In our conversation today, you're going to hear Brien's views on the recent turn in the gold market, his expectation for tax last season, cycle length, and what investors can expect from this year's edition of the New Orleans Investment Conference. Brien, it's great to have you. I didn't see Trump's win as a negative to the gold market, but apparently it is. What's your assessment of what happened and where things are at?
Yeah, it's even crazier than that. You know, I could see it as being positive for Bitcoin, but the market saw it being positive for Bitcoin as being anti-gold for some reason, which I don't think there's that yin and yang going on. You know, I think there's room for both. I think gold is proven. We still have to figure out what Bitcoin is, but I do think Bitcoin is going higher. But the speculators, you know, this is what we were waiting for, the Western investors to get involved in the gold market for so long. Now that they're here, you know, it reminds you of the old H.L. Mencken adage, be careful what you ask for, because once you get the Western investors in, you know, they're going to drive it up on furious rallies and they're going to send it off down on stomach-churning declines and sell-offs. And once it starts falling, you know, it's not like they sold and got out of the market. They're shorting aggressively and trying to hit sell stops and the like. And that's what we've seen. You know, we're taking kind of that fervor off, the froth off the market. And that's where we are right now. The fundamental reasons for this bull market are not only still the same, I think they're, if anything, exacerbated. You know, the Trump administration is talking about cutting costs and everything else. And, you know, as a gold bug and a libertarian, and I cheered their efforts and go ahead, go get them. But, you know, I also recognize the futility of the effort, because there's so much of that spending that is mandatory and built in and politically untouchable. And there's very little that isn't. And even so, each one of those areas that's discretionary has its own constituencies. It's going to be really difficult to do. There's a lot of waste. Don't get me wrong. It's a lot of waste and it's terrible. And I think they're going to clear some of that up. But a lot of it's campaign talk, and when it's going to face the stark reality of the fact that we are in a doom loop, a death spiral, where the market is increasingly skeptical. Investors around the world are increasingly skeptical that we can continue to service our tremendous debt load. And I don't think that the Trump administration is going to do much to alter that trajectory. And it's all good for gold in the long run. And, you know, given the cycles of this market that I've been tracking for the past 6 months ago, they've been very consistent. And we expected a pullback, not this steep, frankly, but we did expect a pullback because that's just the way this market has been ebbing and flowing. But we expect also, judging from the way these cycles are running, a rebound literally within the next week or so. So I think we're going to be headed back up fairly soon. Knock on wood, you know, as a gold bug, I'm very superstitious, but I'm positive for the long term and optimistic for the short term.
Right. I know the Federal Reserve is not supposed to be completely tied to the U.S. government, but we'll leave that to another conversation. But do you think the Fed is trapped? You know, can they pivot away from this current lowering of interest rates moving forward?
No, they are absolutely trapped. They have to cut rates. And it's not that they feel that they need to cut rates because inflation is moderating and that policy is restrictive. They say policy is restrictive, but by every measure, it isn't right now. The economy is doing okay. There are different signals coming from different areas of the economy. It's a mixed bag. We may actually technically have been in a recession for a while. But there's no fundamental reason economically for the Fed to be cutting aggressively. The reason why they want to cut is because of this debt tsunami that's about to crash, or it has crashed on a federal level. The cost of servicing the federal debt is $1.2 trillion. It is the second largest line item in the federal budget after Social Security already. So it's huge. But there is a debt tsunami that's going to crash on the shores of the U.S. economy in the coming months in terms of corporate debt resets. So they really can't afford to have rates this high. In fact, with debt loads this high, after 4.5 decades of ever easier money, debt is going to accumulate to the degree that we can no longer have, for sustained periods of time, interest rates above the rate of inflation. In other words, the currency has to depreciate the value of those debts more quickly than you're paying interest on that debt, or everything, just the whole house of cards falls down. So they want to cut rates. They know we can't handle rates this high with debt loads this high. And the longer they wait, the more urgently they're going to have to cut, because there will be some crisis precipitated.
Yesterday, I wrote a quote from Mark Valek from the In Gold We Trust report on X. And he tweeted, "The East could use gold to check the West. The West could use Bitcoin to checkmate the East." I was wondering if you could help me. I know these aren't your words, but I understand the first part in terms of the East using gold. What I don't understand is the second part, how the West could use Bitcoin to checkmate the East. Do you have any insight to what he might have meant?
Frankly, no. I don't. I don't know what he means there. But the gold has historically flowed to economic strength, and it has flowed to Asia for some time. Jan Nieuwenhuis has done a great job over the years of tracking global gold flows, and he has actually quantified one of the things that we've all kind of known anecdotally over the years, is that when the price is dropping or the price of gold is low, Asia typically buys gold and gold flows to the East. When the price is rising, it goes in the other direction, and you have these rivers of gold supply flowing to the West. That's kind of changed for a number of reasons. Really strangely and unprecedentedly this year, in this gold bull market, we saw Asian investors, particularly domestic Chinese, buying as the price rose. It was a TINA phenomenon. There's no alternative, because their stock market was in the dumps and their real estate market was as well. So they were investing in gold, and they really helped drive it up along with central banks. Again, now we have the Western investors involved, and we have those ebbs and flows. The other thing that's different is the rise and the dominance of the paper gold and paper silver markets now. So the gold does not necessarily have to flow to the West for Western investors to be involved. In fact, all they need are the exchanges and the paper markets. But no, I don't know really how the West can checkmate the East with Bitcoin. Again, I think the ultimate use case for Bitcoin is to be proven. A lot of the advantages of it and goals of Bitcoin have been kind of eliminated by the speculative nature of it, and Bitcoin holders and advocates and evangelists pushing for other people to buy Bitcoin, getting more money involved in Bitcoin, and doing so by getting under the regulatory umbrella of the big markets to get the big money and the institutional money in. And that has removed a lot of the independence from government control, from institutional control, the transparency, et cetera. The transparency is still there, but the anonymity isn't. So those are always in conflict. So yeah, I think that's still to be proven. So I don't know how it really checkmates the East, frankly. It's an interesting concept. I'd love to hear Mark explain it.
Yeah, and I actually asked him on X there, so I don't know if he'll respond or not. But it made me pause, that's for sure. Uh, The bullish gold markets of 2016 and 2020 were amazing, but they're relatively short-lived in terms of, I think, what maybe a gold bug or what I would have expected. Moving forward, we see what's gone on the last few years. Do you have any expectation on what this next bullish portion of the cycle, how it may play out in terms of length or strength?
Yeah, I have some thoughts on the strength. I don't have much to offer on times of length in terms of length. That's always the tricky part. We know what direction the trend is going. We can look at the past and see what similar situations have done for gold in terms of degree of the rise. But the length, the timing, the length has always been the tricky part. In 2016, I would have thought we were there, and here we are rising off the bottom, and this is the market. And it didn't happen that way. We still had to complete the other side of the cup and saucer and the handle and everything. And the handle sure lasted forever, or seemed to. But now I believe we are in the next big, major secular bull market. Only the fourth in the history of gold as an investable asset. Now I look at the early 70s, the late 70s, and the 2000s as the three big bull markets in gold. And if you look at what those bull markets did, you can see that they've ranged from 5.6x to 8.2x off of the bottom. And if you look at the bottom of this cycle as being around $1,050, that means they're probably $6,000, $8,000 when this cycle completes, whenever that may be.
What's interesting is this kind of period of bearishness leads into the end of this year, and the end of the year is always interesting because of tax loss selling. Do you have any expectation about tax loss selling this year?
I haven't really, although I probably should have. I haven't really thought about it that much. I don't think there's that much in terms of losses this year, and this is just speaking, off the cuff. I haven't done any detailed analytics on it, but it didn't seem like the junior sector had yet really responded much to this move. It was strengthening. I know you've seen a lot of financings come through, whereas companies used to go begging and weren't getting their calls returned. People were running into these financings. They were oversubscribed. They were closed sometimes before they were announced, and on better terms. But we hadn't seen yet the kind of price response that we were looking for. So I don't know that this is going to be a major tax loss selling season. We may see some people, depending on what the metals do, giving up hope. But I don't know that we're going to see that much in terms of bargains created over the next month and a half or so. But if there are, I think we should seize on them, because I think that the long-term picture is exceptional. And if whatever bargains develop, they'll be great and good opportunities. My problem is I'm up to my eyeballs in paper, and I have to sell something to buy something, and that's tough to do.
It is.
You know the drill, huh?
Yeah. There's been a very public, well, at least on a few of the senior gold mining companies, a very public push towards diversification or a push into copper. And it's made a lot of sense, especially on the grand sense of things with the porphyry gold, copper gold systems and what that means to the underlying impact to a senior gold miner's production profile. Do you see the push into diversification into metals like copper as a negative at all to the senior gold companies? Again, I don't know if this will necessarily be ubiquitous, but there maybe not being as much pure gold exposure in the future.
Yeah, I that's a very interesting question, and yes, I do. I have to say I would see that. I understand the desire, because copper and gold are so often interconnected in the size of deposits that can really move the needle for a major gold producer. But it does kind of confuse the story and dilute the story a bit. I think you're going to see investors, as this bull market progresses, you're going to see generalist investors and institutions trying to justify their positions and existence as analysts and managers of money by not just buying the indices and going in and doing the work, doing the research on the companies in the sector. And in those cases, they're going to pick one or the other, copper or gold. I think gold is going to be the more explosive market, especially from the junior standpoint. So I can see that kind of diluting the story. It is interesting. I don't think copper can be avoided by the majors if they're looking for big gold deposits. But it is interesting to see people like Mark Bristow at Barrick, who, is a legendary gold bug, who has been changing things a bit and looking for copper. In the end, these management teams want to preserve their jobs. And I think that makes sense. Copper is a tremendous story, very bullish on copper. It's a long-term story, but it's different than gold. And it does dilute it a bit. It really does. I mean, people think of Freeport-McMoRan, one of the biggest gold producers in the world. It's a copper company. It chose its branding long ago, and Mother Nature kind of chose it for it. But, it's not thought of as a big gold producer. It's a low-cost copper producer because of the gold credits. So I think the reverse, you're right, can happen for gold producers.
I've seen over the last year or so a push towards more junior or TSX or TSXV listed companies pushing towards a big board U.S. listing. And to me, it makes a lot of sense. The U.S. is the bigger market. What do you think? Are we going to see more companies look to list in the States, not necessarily OTC, but go for that big board listing? And is that a positive or a negative?
Yeah, I think it's a positive. I think that these companies have to remain rooted in the Canadian regulatory system, though. The U.S. regulatory agencies and rules, they really are ill-suited to junior exploration and development companies. They don't know how to regulate. They don't know how to standardize the whole process. Like a Canadian system does, the Canadian exchanges. And you have to look back to the history of the Canadian exchanges, particularly the Vancouver Exchange, which was for many years a den of thieves. And because of that, the regulators have figured out every manner of scam that can be perpetrated, that people can think of. And granted, they're still coming up with some new ones here and there. But the vast majority of them, the Canadians have figured out how to regulate against and how to mitigate those risks. In the U.S., in particular, over the counter. Now, if they're going on to NYSE Amex or even NASDAQ, I gain some comfort in there as long as they're reporting in Canada as well. But a junior explorer that's only listed on the U.S. OTC, I won't recommend, because it really is the Wild West. And it's not that the U.S. regulators are fostering scams or anything. There's just too many companies on the OTC, and they don't have enough oversight for that many companies, and they don't understand resources and resource development. So that they are really at a loss when you look at some of the rules as far as reporting resources. In some cases, you have to essentially be in production before you can report a resource or reserve. And that just doesn't work, because you can't get money until you have some kind of a resource. So long story short, it is good. It is a U.S. market. The other side of the story is that the bad thing that's happened in Canada is that they've made it very difficult, much more difficult over the years, for U.S. investors to be involved. It's not like the old days where it was so much easier to invest. Now there's a lot of roadblocks. So it's an easier way for U.S. investors to get involved. So generally it's good, but I would make sure that a company is still reporting in Canada.
The gold and silver prices to end the year, do you think that and I know this is always precarious when you put a time on it, but by the end of the year, do we gain back what we've lost over the last couple of weeks?
Well, the end of the year is coming up awfully quickly. I would have had a different answer a month ago or a couple of weeks ago. It's a good chance of it. It depends on how things develop. Depends on the news coming out of the Trump administration in Washington. There's a lot of things that can happen. If Trump nominates John Paulson for Treasury Secretary, I think we're back there very quickly on the gold price. If any number of other things happen, then maybe not. So we could go either way. I think we're going to regain much of what we just lost by the end of the year. But I mean, let's be frank, nobody knows. And so I'm not going to pretend. I have a good feeling about it, but I'm not going to pretend I have any special insights because I don't really think anybody does.
What about picks? Can you give us a couple of picks that you think are good right now?
Well, if I look at my portfolio as we talk, I think I'm not a thematic investor, Brian. I don't say, well, I'm going to focus on uranium or I'm going to focus on this and then drill down and find the best place. I look at each story individually. That said, though, I do think there are two themes here that offer really good upside. One would be the silver plays. I think silver has proven that it's ready to respond to gold. Unfortunately, on the downside as well as the upside, but it's still maintained above $30, which I think has been critical. And so when silver really starts moving, the silver juniors leverage that, and I think they're explosive. We saw that in the spring of 2016, which you alluded to earlier. And, we had silver companies going up 4, 5, 6 times over 6 months. That's the kind of potential I see for some of these silver companies. The other area that I think is being overlooked right now are the big resource plays. Companies of big resources, they have economics on them. They're still trading at long-term lows, and or the optionality plays. The companies that are building big resources in the ground, out of the money, uneconomic at then gold prices. Every one of those projects is now wildly economic at these prices. I mean, most of them became economic at $2,100, $2,200 gold. Now they're all doing very well and achievable. So those are two themes I like. Looking at some specific companies as I go down my portfolio, I like Aftermath Silver, even after the gains that it's had recently. It's one of those silver plays. I like Banyan Gold. I own Aftermath. I don't own Banyan yet, but Banyan is selling for under $10 an ounce in the ground, 7 million ounces. It's delineating higher grade, if not high grade necessarily, but higher grade portions of the deposit, imminently developable. Suffered a bit from the Victoria Gold catastrophe, but which really gave it a discount that I think is going to go away. So it's a great company as well. What else do I like on this? This Erdene Resource Development. It's a company that's not mentioned, don't think anywhere except by me. It is in Mongolia, so it's a little far flung, but it's going to be in production by mid-year next year, turning out tremendous cash flows. And it's still drilling and developing. It will have the highest grade open pit in the world, I think averaging about 3 grams per ton. And they're drilling now to expand that, and they're getting 6, 7, 8 grams per ton outside the pit walls and other deposits. I think this thing they barely scratched the surface on a tremendous land position. So that's a big story, I think, coming up down down the road. Helios Star Metals, love that management team. Very aggressive. They're actually making a little money right now on those gold projects that they acquired, but those will help fund the Anapala toward production, which is a wonderful project. And another one that's kind of running off the radar right now for a lot of people that I like is Relevant Gold. I'm actually having an update conversation with them in a couple of hours. That's a real speculative play, but if they prove the theory, which is being supported by exploration and evidence more and more, they could have an analog to virtually the entire Abitibi gold belt in the U.S. They have some great projects that they're have drilled a little bit, that they're going to be drilling in the months ahead. One of the best technical teams in the business, and every smart person, every smart geologist in the business that's looked at their story has come away extremely impressed and generally bought stock. So it's kind of a smart money play. But it is a drill story. It is with potentially huge potential, but really well-run company.
Excellent.
Is that enough, or do you want some more?
That's fantastic. Yeah, it's fantastic. We are rapidly approaching the New Orleans investment conference. What can investors expect from this year's edition?
Well, they're going to they should expect what they get every year at the New Orleans conference, which is, in my view, the best speakers you'll find at any event. Our business model is very simple. We just build value on top of value on top of value on top of value until someone looking at it and looking at our speaker roster and experiencing it wonders how they can ever miss it, how they could afford to miss it. And I think that's what we've done this year. We do try to do that every year, but this is our 50th anniversary, so we try to take it to another level. But our level has already been pretty high. We've got Jim Grant coming. You don't get to see Jim Grant in person unless you either come to New Orleans or Jim's event in New York. So he'll be here. He's, I think, the best in the business right now. We'll also have George Gammon, Rick Rule, Danielle DiMartino Booth, Brent Johnson, Jim Iorio, Peter Bookvar, Jim Bianco, James Lavish, Adrian Day, Dave Collum, Alex Green, Bob Proctor, Tracy Schuchart. List goes on and on. I'm reading off a list here, but it goes on for dozens and dozens of speakers that are the best out there. Tabby Costa can't come this year, but he's doing a special exclusive presentation recording next Monday for our attendees. Lynn Alden can't make it this year, but I just had an in-depth interview with her yesterday. That was one of the most amazing interviews I've ever had or heard, and I was in on it. And an incredible high-level macroeconomic analysis that I think is crucial for everybody. That's going to be available only to attendees. So, yeah, it is next week. Still time to come down in person, which I really recommend. It's nothing like being there and rubbing elbows with all these great speakers and investors. But there's also a virtual option for people who can't make it in time.
Excellent. Yeah, echo that. Investors need to get out, them boots on the ground at these conferences, expand your network, listen to these titans of the industry, and there's nothing like being there. So we'll link to that in the description below. So if you're looking for that link, it's be in the description. Brian, it's been an absolute pleasure. Hope we can do it again soon. And thank you for coming on the show.
Thank you, Brian. I really appreciate the opportunity, and I'll be seeing you down the road, man.
Sounds good.